Hello guys. Is everyone able to hear me? Awesome. Awesome. That's nice. Are you guys able to see me? I think I turned on my webinar my webcam this time. Okay. Cool. Cool. Yeah, that's right. Yeah, today I'm in the office, so able to turn on my webinar. Let you guys put a face to the name on yeah, let you guys put a face to a name on the guy who's gonna share with you guys the introduction to support and resistance today. Yeah, you saw the microphone falling. Yes, this thing is so shaky. Just once it tilts beyond a certain angle, it just drops. Right. I need to get the thing sorted out. Right. And sometimes I get too excited and I just smash the microphone and it fall off or something, right? Yeah, I'm good today. I'm good today. I'm hosting from Singapore today. So how many of you guys are from Singapore? How many of you guys are from Singapore? I don't think there'll be anyone from Singapore. Or how about oh Boon Hong, hey, shit, you're here. Uh, how about you guys tell me which countries are you guys from? Right, where you guys come from, right? I gotta see Jonas from Denmark. Well, I got a couple of guys from UK, right? Got Ramina, Estonia, England, Sri Lanka. Got a couple of people from Denmark, Kuwait, Dubai, Switzerland, Netherlands. I got China. Hi, ni hao. We speak Chinese here in Singapore too. That's awesome. Muaz from Singapore. Nice. Welcome. Nice to see a fellow Singaporean here. Australians, great. Spain, Greece. Oh, cool. Germany, Slovenia, Pakistan. All right. Ghana. Right. We have people from all over the world. It seems. It's pretty cool. Um, okay, I clicked on something now. It's not working. Okay. That's pretty cool. It's pretty cool. All right. Australia, South Africa, Qatar, um, Cameroon, South Africa. Okay, nice to meet you guys. Nice to meet you guys. Oh, we got some from Madrid. That's Spain, right? Spain and Portugal, right? We got everyone tuning in. Whoa, shit! This is really bright. I can't lean too far back. If not, I'll get burned by the sun. So hot, man. Oh, Venezuela, nice. Thailand. Okay, guys. Okay, guys, awesome, awesome. We almost have a full room now. Actually, I think we had I think we had over 2,000 registrants, 2,500 registrants for this webinar today, and it seems like we are filling the room really quickly. Right, it's nice to see everyone coming in from all over the world, tuning in to an awesome session on introduction to support and resistance. Right, so today I'll be talking about support and resistance, not only the basics, but I will also talk about this a little bit of the psychology behind support and resistance. So you get a better understanding of how to use support and resistance. All right, and one thing I always want to remind you guys, all right, one thing I always want to remind you guys is that if you have a question, ask it straight away, right? I might not have the time to answer you at the end of the webinar. If you remember our previous webinar, we ran double the time, right? I'm just trying to be very respectful of everyone's time and not try to take up too much time this time around, and try to keep it within the 1 hour, right? Otherwise, we usually rarely ever have time at the end of the webinar to answer questions. So if you have them, shoot them straight away. I'll do my best to answer them along the way. I literally have another I literally have another. Okay, wait, just 1 second. I've people saying that they can't hear anything. Can anyone hear me? Yes. Okay. Then I need to send it in the chat. Yeah. Okay. Everyone can hear me. All right. Okay. Okay. Cool. So it's not okay. So it's not me. All right. I literally have another page, another monitor screen open, just monitoring the questions that you guys are sending through. So um so just send them through anytime you have them. I'll do my best to answer them. All right. This is a continuation from our previous few webinars, right? Where there's an introduction to Forex, and now we're looking at introduction to support and resistance, right? Before we begin, always disclaimer, right? Just remember that trading CFDs is dangerous. Nothing that I'm sharing in this webinar today should be construed as advice or recommendations. It's always important to do your own little research before you get into any of the trades. Okay. Now, introducing your host, which is me. All right, your host for today. I'm Desmond Leong. I'm an external analyst for IC Markets. I'm the guy who will be publishing the research on the Telegram channels, publishing the research on our market analysis blog. Right. So yeah. So if you have questions on those research too, feel free to ask me. I'll do my best to answer them. Right. But yeah. So I run the award-winning research firm EFG and the Forex Army. Right, we are finalists for 2019 and 2020, best FX research and best equity research. We got a really good bunch of traders in-house, and we most of our business is advising banks and brokers and hedge funds on where the markets are heading. We developed some awesome tools, which I hope I'll be able to give you guys down the road sometime, once IC Markets gives me the permission to. All right. And already see people asking, what is your favorite trading strategy? I will share with you. My favorite trading strategy has to do with a combination of strategies, right? That means support resistance, Fibonacci, correlation, oscillators, support, stochastic, RSI, a little bit of Ichimoku, right? A little bit of Elliott wave. It's a combining of them together that makes them strong, right? The Telegram link, if you guys, let me see. Oh, sorry, just let me find the IC Markets Telegram link. I'm not sure. Can you guys see my screen here? Right, is t.me/IC Markets room, right? We have almost 7,000 subscribers there. If you're not on the Telegram channel, go there, right? Go be one of the subscribers there. I'm not sure if I can actually send this message, like copy this and send it over to you guys. But yeah, this is the link in the room. Send to all. Okay, I just sent to everyone, right? Yep, I see a couple of you guys helping me very kindly. Someone's asking me to increase my volume. It's kind of at the max already. This should make it slightly louder, but I trust you guys that if it's too loud, you can adjust it on your side. All right. Okay. Now let's get into action. Okay. Now, supply and resistance. How does supply and demand work? Right. How does supply and demand work? Right. Let me just share with you, just for the sake of, I need to take out my handy dandy pen. Right, here's my handy dandy pen. Yep, there you go. All right, just to explain to you how supply and demand works, right? Anything that is above price, we call it supply. Anything that is below price, we call it demand. Okay, so in an area of demand, looking for prices to bounce up, bounce up, bounce up, bounce up. In the area of supply, looking for reversals. Okay, right? That's the basic concept of supply and demand. So why I'm sharing this with you first is because I don't want us to get confused, right? We need to standardize on the same terminology when it comes to supply and demand. The same thing with support and resistance. Anything that is below price, we call it support. Anything that is above price, we call it resistance. Okay? Always remember, what is below your feet now is the support, right? Whatever is below your feet is support. So remember, support is below, resistance is on top, right? Support is below, resistance is on top, right? Okay, I actually see some people saying that they are having problems with the audio. What problems? They're having problems with the audio. Some people can't see the slides. It might be a problem with your computer. Just checking, everyone. One more check just in case. Audio is good. All right, I see Jonas saying audio is good. Okay, no problemo. Okay, let's continue. Okay, now, so I see some people asking me what time frames I use to analyze my charts. So what time frames you use to analyze your charts actually depends on the trading strategy that you have, right? For example, if we were, for example, I'm just going to pull up my charts. I love pulling up charts, right? So just to give you guys a little bit of understanding when it comes to technical analysis, okay, this is just a little bonus material. if you are a short-term trader, meaning that you are maybe you open and close your trades within the day, right? If you open and close your trades within the day, what time frame should you ideally look at, right? Should you look at the 5-minute time frame? Let me see if I can pull it down here. Okay, yeah. Should you look at the, should you look at like the 5 minutes time frames here, like to the 1 hour? Should you look at the 4-hour time frame? Should you look at the days, right? If you are a day trader, you're a short-term trader, you open and close your trades within the day. Should you look at this A? Should you look at B? Or should you look at C? Right? We can consider A, B, or C. Okay, I see a lot of people actually saying I love Louis' answer. He's saying that you look at C for the general trend, then you move to B, and then you decide on A, right? It's a top-down approach. That's actually the correct answer, right? So always when you're kind of making a trading decision, right, it depends on your time frame. It really depends on time frame, right? So for short-term traders, you usually go into you kind of zoom in a little bit more into the charts, right? And you can see more granularity. You can see more of what happens in a day, right, in a chart. So let me just show you what I mean. Okay, let me show you what I mean. Okay, so imagine this, right? So we are on the 5-minute chart. Okay. Oh wow. 5-minute chart. Let's look at a time frame. Let's look at a time frame. This is from February the 17th is here. It's February the 17th for one entire day until here. Okay, this is one entire day of data on February the 17th. It looks like a significant amount of data, right? And you can probably look at how you want to take different kind of trades from here. But if you toggle this to the 1 hour, this is how small it looks. If you toggle this to the 4 hours, this is how small it looks. And if you toggle this to 1 day, you can't even see it. It's just one single bar, right? It's just one single bar. So that's the thing, right? On the 5-minute chart, you see so much in one day. You can see so much movement in a single day. Yeah, but the further you go, right, the bigger time frame you go, the smaller it gets, right? What looked like what could have covered your entire screen, on the 5-minute chart, suddenly it's just a tiny little part on the 1 hour chart, right? So this is the thing when it comes to trading, right? Different strategy depends on different depends, you can use different time frames for different strategies. There's no one size fit all kind of strategy, right? So if you are going for your opening and close trades within the day, I ideally go within 15-30 minutes to look for my entry, right? And as low as 15 minutes for it, right? But if I cannot look at one day chart and look at a single bar and try to take a day trade here, because you're not seeing enough of the chart within the day. You know what I mean? So anyway, I don't want to digress too much because we do need to cover things today. I can see that Boon Hong is asking about talking about trading mentality and emotions. We will talk about that in maybe if you have time towards this or on the next webinar, right? That's talking about trading psychology, which is equally important when it comes to trading, right? You don't just trading psychology, you need to have a fixed set of rules when it comes to trading, so that you don't go into the whole concept of revenge trading, chasing your losses, right? That is one whole entire topic by itself, and we look at the actionable parts on it, right? So just to let you guys know, IC markets, right? I just want to cover this really early on, right? IC markets, you go to icmarkets.com/blog/webinars, right? I'm sending this to everyone, right? As we have more webinars that come up, you'll be able to see them here. We should be we will be having a couple of more webinars actually for the rest of the year, right? So our my goal is to take you to trading nirvana or something, right? To reach mastery when it comes to trading, so that you'll be confident, you know how to apply the different things when it comes to trading, and you're learning from an award-winning research house, right? We really know our stuff, right? And we're working very closely with IC Markets to ensure that you guys know your stuff, right? You guys know how to trade, you guys, and this is done through webinars. And over time, we'll be introducing some really fancy new trading rooms and tools, right? But for now, it's through webinars. So be sure to sign up for the webinars along the way, right? Whoever is late, I don't think they'll be able to attend the webinar anytime soon because it looks like the room is full. So yeah, trading Nirvana. That's where we're going, guys. All right. There's the webinars. Mark will be recorded, and yeah, you can see them. You can view our previous webinar, Introduction to Forex. There. Um, we got Gregory asking. Not necessary, right? Gregory is asking, does brokers make money on our stop losses? No, brokers don't make money on your stop losses. It also depends on the kind of broker. There are A book brokers and there are B book brokers, right? So what you want to know, right? What you want to know is that no matter whether a broker is an A book or B book, right? The price feed matches the price feed is actually very, very close. It's very, very hard to be manipulated, right? Unless your broker is located in some funny island like in South like Vanuatu or something, right? And they are and maybe they're getting questionable price feeds, right? Then most of the time, you probably want to stay away from those brokers, right? Now, let's moving on a little bit more. Shrink your pick. Okay, Florence, I got that. All right. Okay, yes, this seminar will be recorded, but of course, in the recorded seminar, I will not be able to answer you. So I'll do my best to run through the questions now. Okay, now let's go. So the first kind of support and resistance that I want to introduce to you guys, right, is called the swing high resistance. Swing high, swing low. The rule for swing high and swing low resistance is very simple. Okay, the rule for swing high and swing low is you need at least 1, 2, 3. 3 to be considered a valid swing high. So you notice once this swing high is done, second swing high is done, and the third swing high is done, right? Then you will look for the fourth swing high, right? Because first time, is nothing. Anything can cause a swing low, right? This is a swing low, 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 right? If it's just one occurrence, it can happen anywhere. It's not safe for us. Okay, it's not safe for us. If it happens 2 times, I will consider it a little bit of a coincidence. Yeah, sure, it happens, that's great, right? But only when it happens 3 times, then do I say that, all right, this is a valid swing high. There is clearly a whole bunch of people who are actually watching this level. So what happens when you see 3 times is that you tend to look out for the 4th time. All right, 4th time when price comes up and tests it and does a nice little reversal there. Okay, so that is the most basic, right? That's the most basic of supply and demand, right? Swing high and swing lows, right? You try and look for at least 1, 2, 3, right? That is my rule of thumb. Some people go with 1, some people go with 2, but for me, I need at least 3. The market, there are enough markets to trade. IC Markets has so many, they have so many different markets you can trade, majors, minors, cryptos, even stocks. So there are enough markets for you to cycle through. It is more important to hold yourself to a higher standard, right? And have less markets to look at to trade than to lower your standard to just one swing high and then you can trade 100 different markets, right? You can trade a lot, but you might not earn a lot, right? So always hold your trading strategies to the highest standard you can. And for me, it is having at least 3 swing highs in a row, and then you look to trade on the 4th swing high. Okay, now we got questions coming in saying what time frame do you set up for supply and demand? Usually for supply and demand, I would stay away from the 1 minute. I'll stay away from the 5, 15 minutes, and 30 minutes. I will try to look at the 1 hour, minimally the 1 hour. Okay, because for supply and demand to work, you need more and more people looking at it, right? And I noticed that in the 5-minute charts, in the 15-minute charts, it is just too it's just too noise. There's just too much noise there, right? So I would minimally try to look at a 1 hour chart. Okay. All right, Sam. Yes, this webinar is recorded. What time frame is that on? What time frame? Are those swing or day trades on any time? Right. So usually I'm a bigger fan of day trades and swing trades. People who have seen me scalp before know that I can go into the whole world of scalping, and it can be very, very exciting. It can be very scary. You need like nerves of steel, right? When it comes to scalping, you mustn't let emotions come in. But usually I do scalping, and occasionally I'm mixing day trading and swing trading. I tend to like to look at the H1 chart. Okay, I tend to like to look at the H1 chart and H4 chart if I'm looking at supply and demand, because there is a lot less noise, right? And guys, yes, for everyone who is here today, yes, the webinar will be saved, right? Of course, I won't be able to answer your webinar. I won't be able to answer your questions, in the recorded webinar, right? So just take this chance to ask me the questions that you've been burning to ask a professional trader. Okay. Now moving on, right? So the next slide, the pullback support, right? The pullback support is my next the pullback support is my next. Okay, Marcel, I will explain that later, right? The pullback support is my next favorite one, right? Let me explain to you the psychology behind a pullback support. Okay. Yes, Sam, we can look at the live chart later if we have time, right? Because many, very often we might not have enough time. But yeah, if you have requests for me to look at some special requests for me to look at some charts in real time together, just let me know. I will give you my professional perspective on some of the charts, on some of the symbols. Okay. I got walk. Okay, Wakas. I'll answer that later too. Okay, the supply resistance, all right, you can see that the pullback support is formed this way. Price comes up one time, it comes down, right? It comes up again, it comes down. It comes up again, it comes down. And what would you do if price comes up to here? What would the majority of people be doing? Would they be buying or would they be selling? Guys, what would they be buying or would they be selling? Okay, we got quite a number of people saying buying, selling, right? Seems very split, right? I just need to cover up the, what happened on the right. Then most people would think that price will go down. Okay, most people would think that price is going to go down, and that is the truth, right? And this is the beauty of the pullback resistance, right? This is the beauty of it, right? The moment price breaks up from here, right? The moment price breaks up and it starts going up, what do you think these poor people here who have sold, what do you think they are doing? Are they happily sleeping at night, or are they panicking? Are these people, what is the emotion of these traders when they see such a big breakout occur, right? Yeah, a lot of people, sometimes, so yeah, I see a lot of people eroding their bank accounts, FOMO, panicking, right? And Louise say that, realize eventually it comes back down. You never know if it comes back down, okay? And I tell you, the majority of traders don't use stop losses, apparently, right? And that is a bad thing to do, right? When it comes to trade management, you always need a stop loss. You need to know a point where you know that you're wrong, okay? So okay, most people will be, they'll be panicking, right? As price continues to rise up, they're like, oh man, I should have used a stop loss. Oh man, I can't sleep at night. There's no more meaning to life. I'm going to give up trading, right? This is terrible, right? I should never have done this. Then price starts coming down, right? They're having, yeah, that's right, man. I can see Sharif saying is they're having nightmares, right? They're having nightmares. Maybe they can't even sleep. Right? But as price comes down and they're like, oh man, maybe trading is not so bad after all. There is hope in this world. There is a God in this world. Not all hope is lost, right? And they stop questioning the meaning of life, right? And as it comes down further and it comes down further and it finally comes down here, what are these people? What are these people going to do? Are they going to hold on to their short positions, or are they going to close off their positions? That's right. I can see a lot of people say, I see some people say, hold on, I hope not, right? Holding on means you're married to your trade. Do you want to go through another crazy moment of going up and down, right? You must be some kind of masochist, right? You love pain or something, right? If you want to go through that again, right? So most people would say, that's it. I'm at break even. Oh, thank the heavens, right? Thank the stars. I'm going to close off my trade. And because they sold, right, to close off their trade, they must buy, right? They must buy to close off their trade. And when they buy, what happens when a lot of people start buying over here? A lot of people who thought it was going down and they start buying over here, right? It pushes price up. It pushes price up. And that is the concept behind buying a breakout, right? There's always a whole bunch of people who are waiting for price to come back. And we see it so many times where price makes a pullback to the breakout level and then it just takes off again, right? More often than not, you will see it happen, right? More often than not, you see it happen, right? So Mark, is this a chat room for the webinar? That is right. So I believe it's only me who is able to see your questions, right? So I'm able to see everyone's questions as they put it through, right? So don't hesitate, just send the questions through. I have another page, a monitor just open, looking at your questions, right? And this is where it takes off. So this is what I call the pullback support. You take price, pullback, and then it bounce off. Okay. Damn, I'm having hiccups now. Having hiccups. Sorry. Now, resistance, the pullback resistance. Okay, it's the same thing as the pullback support. Right, same thing as the pullback support. You're looking for places where price bounce at least 2 to 3 times. Okay, it looks very nice there, and then suddenly price breaks out. Right, and of course these people, they are still questioning the meaning of life. You know, they don't know if they ever want to trade again. They don't know. You know, they're never going to. You know, they're going through a nightmare. Then when it finally comes here, they're going to close off their long positions. You know, they thought that price was going to go up, right? They thought that price was going to bounce up, but it didn't bounce up, and instead it broke down. So when it comes back to here, they're going to close off their positions, which requires them to sell, and this creates the momentum, right? This creates the momentum to push prices down, right? So a lot of people have been asking. Let me see if I have it here. A lot of people have been asking, how do you set a stop loss? Okay, how do you set a stop loss? I noticed that in my slides I don't have it, but let me just share with you guys. Important important rule that I have when it comes to stop losses. Okay, now always remember when it comes to trading, imagine if you find a really nice level here, a really nice support level, and a really nice resistance level. Okay, imagine you are buying. Okay, this is where you buy, right? And you're expecting price to go up. Remember, you're buying, right? You're buying. Where would you put your stop loss? Will you put your stop loss here, here, or here? Now, I mean, where will you put your take profit? Will you put it at A, B, or C? I swear my handwriting has improved. I went for like penmanship courses. Okay, who put it at A, who put it at B? No, I mean the take profit, not the stop loss. Where would you put it? Remember, B is a very strong level of resistance, right? B is a very strong level of resistance. I can see a lot of people A, B, C, A, B, C, A, B, C, right? Those who answered A, yes, you're correct. A is safer, right? Always remember your profit should be before. Okay, your take profit should be before a key level. It should always be before. Why don't you put it at C, right? You don't put it at C because what if price comes up to here, and because this is such a big level of resistance, even before it hits your profit target, it reverses, right? So, and that's the reason, right? You don't put it at C. The reason why you don't put it at B is because people know this is a big resistance level, right? So when price is going up there, they might want to close off their positions even before they reach B. So it's always better to sacrifice just that few pips, right? And get up at A. Your take profit always before a key level. Now, when it comes to stop loss, right? We got stop loss, we got here. We got the middle part, which is a very strong level of support, and we got this part here. We got D, E, F. Where would you put your stop loss? D, E, or F? All right. Okay, a lot of people saying F. A lot of people saying F. Some people say D. Right. Got Chris saying that is D. Neither, just below the buy the price. Now, Tim, that's a little bit confusing. F is harder to reach. Yes. Okay. So when it comes to your stop loss, remember, guys, stop loss is beyond the key level that you found. Take profit is before, stop loss is beyond. I will put my stop loss at F, because when price is coming down to here, right, it gets attracted to the key level. We are hoping that price touches this level and bounces up. That's what we're hoping, right? Imagine you put it at D. That is where, you get stopped out. D and E is where you get stopped out and price reverse. And when that happens, you start questioning, right? Oh man, my broker is stop hunting me, right? And you're like, they just got me out at that level. I can't believe it, right? And you say the world is a conspiracy, right? The whole trading world is conspiring against my one trade, right? And that is because you're putting a stop loss at D and E, right? You always want to give yourself a little bit of breathing space, right? So you put your stop loss slightly beyond. Okay, yeah, so this is a buy, this is a buying order, right? So you want to put your stop loss just slightly beyond. Okay, now, so yeah, that answers my questions to everyone on a where do I put my take profit, where I put my stop loss, right? On a without diving into too much details and example, I use this as the main guiding principle. Okay, remember, yeah, just use this as the main guiding principle. My stop loss is beyond, my take profit is before any key level of support or resistance. Okay, and now, guys, we have already hit the half an hour mark, right? And we are not halfway through our webinar yet, so I will move on a little bit faster. Okay, so this is an example of a pullback support, right? This is the example of a pullback support. I'm actually having a sore throat today, so I'm going to need to excuse myself a little bit to get a little bit of water for myself later, right? But I'll leave you guys with a question before I do that. Okay, so the pullback support, right? This is how it looks like. Let me take out my handy dandy pen, right? So Kasir, you don't need to worry about what time frame I'm using, whether it's H1, H4. Theory is the same across all time frames. When I'm teaching you the theory, H1, H4, M15, M5, D1 is the same. It's the application of knowing when we apply it that is important. And that is where we'll dive in a little bit deeper when looking at your trading strategy, the amount of time you have to trade. If you have 1 hour a day to trade, you don't want to be a scalper. You want to be a day trader, you want to probably be a swing trader. And if you're a day trader, swing trader, you probably want to look at something like the H4 or the H1 chart, right? So it really depends, right? There is no golden rule when it comes to time frame, right? There's no golden rule on which time frame is useful. Although most of us agree that the M1 time frame is terrible to look at, right? It's just too much noise there. But there is no golden rule to that, right? Rather, it is down to the amount of time commitment you have and what you're comfortable with. Okay, so this is exactly how a pullback support looks like in a live trading situation, right? Same thing, one big resistance that price finally dropped from. After that, as price work its way up, everyone is thinking that it will drop down here, right? Everyone thinks it's going to drop, but it doesn't drop, right? It doesn't drop. Instead, it starts to skyrocket through there. And this is where they start panicking, right? They start panicking and, it takes them on a one wild ride or something, right? And when it finally comes down here, this is where they want to get rid of their trade. Okay, now when they want to get rid of the trade, the moment they get rid of the trade is where you go from the next you go from pullback support to overlap support. That is the third support that we're going to look at. Okay, that's the third support that we're going to look at. And you can see here, right, what happens from here is that price bounce off from there. The moment price bounce off from there, this is what we call an overlap support. Okay, the moment price bounces up, the moment this bounce happens, it turns from a pullback to an overlap. From a pullback to an overlap. Overlap just means one thing. Overlap means that there is from the price tested it one time from the bottom, it tested it one time from the top. So the bulls and bears have agreed that, all right, this is the price we agree at. It's an important price to look at. It's an overlap support. And yes, in some sense, a buy limit is a good option. Is a good option for this situation, right? You wait for price to come down to the pullback level, and then you play the bounce, right? Some of you guys asked me earlier, I would even use things like I will use a Fibonacci. I draw a Fibonacci from the bottom to the top. If this lines up with a 50% retracement or any other retracement, even better. If this lines up with an extension, even better. If this lines up with a stochastic being oversold, even better, right? If this lines up with a nice long-term moving average, even better, right? So trading is not about looking at one thing and taking the trade by itself, right? I will look at the overlap support. I will look at the Fibonacci. I will look at maybe the moving average. I will look at the Fibonacci extension, right? I'll look at the stochastic, right? So by itself, each strategy that you use to trade, maybe it can only give you support and resistance might give you a 40% chance of winning, right? But then if you add in, right, if initially it's 40%, right, and then you add in another 20% with Fibonacci, another 10% with Fibonacci extension, another 10% with a stochastic, another 5% with moving averages, all of this adds up to give you a much higher chance of getting a profitable trade, right? Then in the end, you have something like 85% chance of getting the trade correct. So think about it as confluence. It's not about just finding one single thing and like, oh, I'm a support and resistance trader, I don't look at anything else. That is not how the world cares, right? The world doesn't care if you are a moving average trader, a moving average crossover trader, a stochastic trader, right? You need to combine all of it together in order to increase your probability and the odds of you being correct. Okay. Now, let me see some questions here. What points do you use for Fibonacci, M and W? Yes, M and W is kind of like, so Tim is asking, do you also use the M and W shapes, right? M and W are actually kind of variations of the harmonic pattern. I do use them, right? Because they do borrow a lot of it from Fibonacci. Karif is asking if I'm going to do a session on Fibonacci. Yes, I am. There'll be one of the most awesome webinars around. It gets very intense, right? We'll also be having a live trading room in the future where you'll be able to join me and practice your trading in real time with me, right? And I can guide you on whether you're doing your Fibonacci right, you're doing your support and resistance right. There's going to be exciting times over there, right? But that is for the future. We'll be doing price action too, right? So we got a question asking what's the difference between supply demand zones and support and resistance. They are the same. They are the same. Turncoat support, normal support, all of that is the same as turncoat supply, all that kind of stuff is the same actually. You're essentially just looking at buyers versus sellers. Okay. Now can you write down which one of each percentage? Okay, Amin Bola, right? You're asking how you can get your webinars. Remember, just head over to IC Markets. Head over to icmarkets.com/blog/webinars and just send it in the group chat. Head over to there and you'll be able to see the past webinar recordings, right? And the current webinar that we are on. Okay. So you're asking which moving average is good. I'll answer that later. We have another topic for that, right? We have a lot of things to cover in the whole world of trading. It's exciting, right? So today I'll be sharing you trend lines, yay or nay. Okay. Is this trend line good? Yes or no, right? You can answer it. I'm gonna get some water. I see a lot of yes, I see a lot of no, right? How many of you guys want to see my drink? This is my water for today. Whiskey. Nah, nah, I can't drink any whiskey now. I'll start spewing nonsense for you guys. But it's never too early. It's never too early. It's 5 p.m. in Singapore. It's not too early. Too bad today is not a Friday. If not, we can have some drinks, yeah. I love whiskey too. That's nice. Nice to see other whiskey lovers here. Right? You know, when trades don't go your way, that's the best thing. You know, you just drink a bit and you forget it. Helps you sleep very well, right? Yeah, helps you sleep very well, right? Okay, yeah, I'm in Raffles Place now, guys. Yeah, my office is at Raffles Place. Um, okay, yeah, it's good to drink whiskey, but not before you take a trade. Okay, just to let you know, because you're gonna get liquid courage. You know, liquid courage. You suddenly feel, you know, how much am I gonna risk on this trade? You know, tell you what, I'm gonna risk 10% on this trade. I'm gonna risk 20% on this trade, right? So, nah, don't drink whiskey before you trade, guys. Take it from me. Take it from me. You can drink whiskey after you not drink whiskey when you celebrate your wins, okay? Or you want to drown your losses, right? Either one, but don't take it before you trade. Okay. Now, guys, this is a valid trend line. It's a yay trend line, right? The reason for it is because for trend lines, I look minimally for 3 touches, right? You can see that there's 1 touch over here, 2 touch over here, and 3 touch over here, right? So sometimes this 1, 2, and 3. Number 2 and number 3 um is quite close together, right? So if you actually toggle to a higher time frame, it might, I'll show you how it looks like later, but only when there are 3 touches, then I'll look for the 4th touch, I'll look for the 5th touch. Then you can continue playing down. Okay, now just to give you a perspective, right? These two are the same. These two are the same. This chart and this chart are exactly the same. If you look at them, they're the same but different time frames. Okay, so you notice that previously we had 1, 2, 3 touches here. This is 1 touch. For this over here, I will consider this 1 touch. I will not consider it 1 touch, 2 touch, 3 touch, because it's too close together. Okay, and then this will be my 3rd touch. So actually it depends on, depending on the time frame that you use, right? You might get a different kind of interpretation of the trend lines. Okay, you might have a different interpretation of the trend lines. Now, we have a big question here. Okay, for trend lines, do you use the wicks or do you use the body? Do you use the wicks or the body? What do you guys think? We got a lot of people saying wicks, we got some people saying body. People saying stick with what you use. Average of both the middle. Guys, okay, you know, I'm going to pull up some charts now. I'm gonna put up some charts now, and we can see. I will finally answer this question for you guys. Okay. Chart time. Okay. Let me look for a chart. Let me look for one where I can draw a trend line. All right. Okay. Let me remove all this. Okay, guys. Now we are on the 1 hour chart. Okay. We are on the 1 hour chart. We are going to draw a trend line. We're going to pick it from here, and we're going to touch these 3 ones. Okay. We are catching the wick. We are just using the wicks. Okay, now let's move down to the 3-minute chart, or maybe just a 5-minute chart. You can see it still catches the wicks. We move down to the 15-minute chart. It still catches, you know, the trend very nice. right? If you go onto the 4-hour chart, it still catches the trend very nice. Agree with me? All right. Now, instead of that, how about we use the we use a 15-minute chart. Let me see if I can get an example for you here. 15-minute chart, and we use the close. Okay. You can see in this case, I'm going to delete this. If we use the close, I'm going to start from here. Give me a second. I'm not able to see the. I'm not able to see it. All right. We're going to use the close. This is the close. Now, where is the close here? I'm going to capture the close over here. You can see this is the close. And it roughly the close over there. Okay, this is us using the close instead of the wick. So you see, when you use the close instead of the wick, right? If I toggle to the 1-hour chart, and I'll toggle to the 5-minute chart. See, I toggle the 5-minute chart. It doesn't look nice over here. You know what I mean? It doesn't look nice over here. It looks like price has broken this. But on the 15-minute chart, it looks very nice, right? On the 15-minute chart, it just touches the close. But on the 5-minute chart, you can see that it cuts off, price like this. And the same thing when it comes down to here. I think it's over here. You can see on the 15-minute chart, it captured the close very nicely. But on the 5-minute chart, it broke this thing here. Okay, so that is the problem when you use the close, right? When you use the close, it only works on one time frame. When you use the wick, it works for all time frames. Now, when it comes to trading, do you want and when it comes to trading and you're going to buy at on a trend line, right? When it comes to trading and you're going to buy on a trend line, do you want to buy when everyone else is buying, or do you want to buy when everyone is when you're not sure if anyone else is buying? What do you want to do, guys? When all are buying. You want to buy when everyone else is buying, right? You want to buy when everyone else is buying. When everyone else agrees universally that this is the same trend line that we're looking at. And the only way that can happen is if you're using the wicks. Because as I showed you earlier, when you use the wick, no matter which time frame you're on, you'll be the same. But if you use the close, the 5-minute trend, a close on the 5-minute, using the close on the 5-minute for your trend line looks different on the 15-minute, it looks different on the 1 hour. Now, okay, you guys got a question, right? So what if there is a very long wick, right? This will just further emphasize my point. I just need to give me some time to find a very good example here. Give me some time to find a very good example to let you see what I mean. Okay, just to make things slightly easier, I'm not going to go for three. I'm not going to use three touches. I'm just going to use maybe 2 touches. Okay, let me see, like this trend line to this trend line. We're using the close. Okay, so this and this, you can see it looks so a wick basically means the shadow of a candle, right? So you can see we're using the close. We're using the high. Okay, when I toggle to the 30-minute chart, oh shucks, where is it? Give me a second, I need to find that stupid thing. You know what, I'm just going to draw another one. I'm just going to draw another one. I just need to find a good example for you guys. I'll probably shucks. Let me find a good example to help explain this to you guys. This might work. Okay, this might work. I'm gonna do a bar replay. Okay, from here to here, we're catching the lows. Okay, we're using the extreme of the week to catch the trade. If we use the, okay, you can see this here, right? It's very obvious. If we change this to the 5-minute chart, you can see it still catches it very nicely, the low and the low. We change it to the 2-hour chart. It catches the low very nicely, right? Okay, now what if we use the close? So this is what I mean. If you use the extremes of the week, if you include the week, it will be the same no matter which time frame you're on. Okay, even if you go into the in the 5-minute chart, right, you can see it's still there. You change it to the 1-minute chart, right? 1-minute chart, there's no data, never mind. I'll go into the 5-minute one instead. Yeah, 5-minute ones, it's still there. Oh yeah, still over here. Okay, just bear with me a bit. Bear with me a bit. Okay, now I'm going to remove this, and now I'm going to use the close instead. I'm going to click the close over here, and maybe the close over here. Right, so I'm going to extend it, and this is my trend line, right? So you can see that there is, it catches the close, it catches the, the close, it catches the close. Okay, it catches the close. Now it looks very nice because there are long wicks at the bottom here. Okay, it looks very nice when there's long wicks at the bottom, right? But what if I change this to the 15-minute chart? Guys, does this trend line look good? Yes or no? Finally, I got a universal answer. Finally, everyone agrees with me. No, it sucks. It looks terrible, right? It looks terrible. Okay, and that is a problem when you use the close. It looks nice on the 1-hour chart, right? I was telling you, man, on a 1-hour chart, it catches the close, it bounces up very nice. But the moment I change it to a 15-minute chart, it looks like crap, right? So the trick is to use the extremes. Because the extreme point on the 1 hour, 5-minute, 15-minute, 30-minute, 4 hours, or 1 day, they're all the same. The extremes are the same, but the closes are not the same. So that's the trick when it comes to trend line. Always use the extremes, the wicks. Okay. Yes, for supply and resistance, I use the same thing too. I tend to look at the wicks. Okay. Now, so Ramona, you're asking a question. Yeah. So back to this, right? We when I find at least 3 touches on the trend line, yes, then I can look to play a trade on the 4th touch. Okay, this trend line, yay or nay? For those people who say nay, why? Okay, I see a couple of reasons for the nay. But let me tell you one thing. It's a nay for a very different reason. It's not a yay. A lot of people think it's a yay, right? These trend lines work. Trend lines are either going up or they are coming down. If it's coming down, it needs to be above price. If it's going up, it needs to be below price. you don't draw a trend line that is descending this way. Okay, you don't draw a trend line that's descending. That's not a support or anything. You draw a trend line that is above, maybe a trend line like that, or a trend line like this. That is still valid, right? So a trend for channel is different. Right? But for trend lines, right, we use it for prices that, you know, if it's going down, it needs to be above price. If it's going up, it needs to be below price. That's the trick to trend lines. You're trying to look for a trend, and by that very definition, a trend is formed when you're seeing lower highs. I mean higher lows. And you know, a downtrend is seen is the definition of downtrend is that you have lower highs, right? Your highs are lower. The definition of an uptrend is that you have higher lows. You know, it's going up. So there's nothing here that talks about a trend line making you know, this kind of stuff. Okay. Now, Emmanuel is asking, what's the minimum number of candlesticks do you consider to determine a trend, right? It's hard to say. But I try to keep it at least between each bounce, like from one bounce to the other bounce. I try at least have 20 or 30, minimally at least 20 candlesticks, right? Because if it's too close, if like a bounce is like that, I won't even call it a trend, right? I need to see the big bounces, and the big bounces. Okay. We might have time for live charts. I'm not sure because we are actually running out of time, right? But I'll do my best to cover as much as possible with you guys. If you want a live trading session, you know, I'll have a feedback session later and we can look through things. Yep, there you go. Uptrend, you know, is from the bottom, downtrend from the top. Okay, remember, it always needs to be going upwards from the top. It always needs to be going downwards from the you know, from the top, and upwards from the bottom. Always remember this. That's how you determine a trend line. Okay. Yeah, rules to obey, at least 3 significant touches, right? And then I will play on the 4th touch, right? You can see 1 touch, 2 touch, 3 touch, and then we play on the 4th touch. We play the reversal. Okay, so that's how we, you know, trade trend lines. So of course, what I like to do, channel, is this I'll try to cover as much as possible, guys. But channel, is this a good or bad channel? Don't worry, it's not a trick question. Yeah, it's a good channel. This is a good channel. Okay, because there are at least a couple of touches, right? You can see this channel worked out really well, you know, bounce up and bounce below. Channel, always remember 4 significant touches, 2 at the top, 2 at the bottom. Don't cheat, say it's 2 at the top, 1 at the bottom. It's 2 at the top and 2 at the bottom. Okay. If it's a horizontal channel, it works fine. There's horizontal channels, there's ascending channels, and there's descending channels. Okay. Now I'm just going to teach you something. Does this chart look nice? Who have heard of the Ichimoku Kinko Hill? Yeah, I can see a couple of people heard of it. Yeah. Some people say, what? You know, what is that? You know, have you drunk your whiskey and you're talking nonsense, right? So yeah, it's Ichimoku Kinko Hill. When you load it on the chart, it looks very messy, right? Now the trick to this is to remove everything and only leave the cloud. The cloud is not Chinese, it's Japanese actually. It actually means charts at a glance. Okay, right? So remove everything, right, guys? Remove everything and just leave the clouds. This is a secret tip that I'm gonna give you. Remove everything and just leave the clouds. The clouds give you the best gauge of momentum. All the other lines don't tell you enough, right? You just need to look at the clouds. And how you can do that, let me show you here, right? When you combine the clouds with a trend line, right? Suddenly you can, you know, you got 1 touch, 2 touch. Let me show you. You got 1 touch, 2 touch, 3 touch. You can consider this a 4th touch, right? And it comes back up to here, and it's directly in the middle of the Ichimoku cloud. Anything that is below the cloud is bearish. right? So not only do you have a descending resistance line, you also are in the middle of an Ichimoku cloud. So you not only have one element, you now have two elements, right? If you did a Fibonacci retracement from the top down to here, you might get a 23.6 retracement there too, right? So you just combine, you just say, the Ichimoku Kinko Hill is actually on your IC Markets MT4 terminal. You can find it there, okay? So that's the trick, right? Now I'm going to show you how you're going to combine it together. So this is an example, right? This is an example of price, bounce up one time and it break down, okay? So this is called a pullback support, right? You're waiting for the pullback support, okay? We're waiting for the pullback support. Um, now what happens after that is that price now comes up to the pullback support. So there is a pullback support here. There's one. There's roughly a 23.6 retracement, about 23.6% retracement. That is number two. There is a Ichimoku cloud. That is three. So maybe, so you got 1, 2, 3 elements. All of it added together, maybe you got 30% chance of getting correct, 20% chance and 10% chance. You add them up together, you got from 30%, now you have a 60% chance of being right. Okay, you add in price action at the point in time, maybe you can give you additional 5 or 10%. Okay, guys? So what happens after this, of course, is that price reverse from there. Okay, it doesn't happen all the time, right? Not every one of these setups will work out very well, but what I do want to let you know is that you need to combine it together. Don't just trade one thing by itself. Learn as much as possible, and over the next few webinars, right, I'll be teaching you all the advanced kind of trading techniques, support and resistance, trend lines. Today, like trend lines, right? I'm going to teach you tips on the Ichimoku. I'm going to show you stochastic. I'm going to show you Fibonacci retracements. I'll show you Fibonacci extensions, a little bit of harmonics, a little bit of Elliott wave, a little bit of correlation. I'll be showing you all the different things you can add together to give yourself the best chance of being right in a trade. Okay, it's about confluence. Okay, and does God send me? Maybe he does. I have no idea. Thank you for your very kind words. But I'm here just to help you guys, right? Yeah, I'm here just to help you guys trade better. So please, anytime you have questions, just send them through. How do you mark support and resistance lines on the chart? I kind of use TradingView. Yeah, Vascal, I actually have my own a Bloomberg terminal in the office. I think it's very useful for fundamentals, but less useful for technicals. Okay, right? It's much less useful for technicals, right, guys? I do want to let you know that we are reaching we just hit the 1 hour mark, and I cannot drag this on for too long. So I do want to get some feedback from you guys. I'm going to ask you a couple of things. Okay, now, firstly, this is what I usually ask at the end of every webinar. You can rate me. Let me just erase this. If you can just share with me, 1 to 5, right? How you found this webinar, 1 being terrible, 5 being great, along with one reason on how I can improve, right? Just please send it through. Or if you think that some ways that I've done well, please let me know too, right? I can see some of you guys saying 5. Oh, Sam, that's very sad. Why? You gotta let me know, right? So okay, some people wants oh, no live charts, right? Sam, there'll be a time for live charts, right? There'll be in the live trading sessions that we're going to include. You must know that we're trying to teach as much as possible. Okay. Thank you guys. Thank you for rating. I can see a lot of people say 4 and 5s. Amazing, you guys are awesome, right? It warms my heart, right? Now, guys, the next question I'm going to ask you guys is, what do you want to learn? What do you want to learn? Just type it all out over here, and I will have okay, I can see the first 3 answers are Fibonacci. Oh shit, right? Tell me what you want to learn so I know how I can craft the upcoming webinars for you guys. The upcoming webinars. Oh shit, so many people are saying Fibonacci. Yeah, market manipulation, Ichimoku cloud, All right, we got wave, divergence, risk management, moving average, trade professionally, logically, right? How to draw, scalping, price action, Elliott wave. My God, you guys want to learn everything. You guys want to learn everything. Psychology, price action, MACD. Okay, man, I have, yeah, how to make money. That's the most important. You guys want to learn how to make money. Right. Okay. Okay. Now I need to know one thing from you guys. How many webinars a month would be a comfortable range for you guys? One webinar a month, two webinar, three or four, right? Not 3,000, guys. That's scaring me. For a month, yeah, for 10. Yeah, I can't do 10. I might die. 30 webinars a month. I might need more than whiskey for that. Two webinars, one, five, four. Okay, one a week, one. Okay, all right. Okay, I can see a lot of people saying about two, three, or four webinars a month. Okay, that's very helpful. That's very helpful. And last question: how long are webinars good for you guys? Is 1 hour good? 45 minutes good? Is 1.5 hours too long for you? Right? 1 hour, 1 hour, 2 hours. Oh, please don't put me through 2 hours. Very tired. I'm gonna lose my voice. 1.5, 2 hours, 45, 60, 1 hour, 45, 8 minutes, 8 hours. I hope you're not saying 8 hours. I think you mean 8 minutes or something. 45 minutes. 1 hour a day. Okay, most of it 1 hour. Don't worry. All right. Better have time for whiskey. Yeah. My webinars in the evening. So once I'm done with this, I'm gonna get my whiskey. Right now, last question for you guys. What's your favorite whiskey? For people who love to drink whiskey here. Uh, that's right. Yeah, that's right. I got James. You got a Yamazaki. I got a Yamazaki here. It's a small bottle, right? No, this is Nika. Sorry. I got you got Johnny Walker, Speyside whiskey, Jack Daniels. We got a whole bunch of drinkers. Yeah, I got no alcohol. Oh, I got that guy who likes the Alchantosan guy. I can never pronounce that, right? Bailey's. Bailey's is not a whiskey, man. Oh, some people in vodka. Are you from Russia? Awesome, awesome. Okay, okay, guys. It's nice knowing everyone. It's nice knowing everyone. He drinks a lot of black labels here, man. Wilson. Okay, awesome. Now, guys, remember, go on to IC Markets webinar. Go sign up early. Tune in early. All right, because the spots get taken up. I know GoToWebinar only has 501 people allowed in each webinar, and usually it gets filled up pretty fast, right? So what I want you guys to do is go to IC Markets. When the next webinar is set up, I think you get an email, right? You get a webinar, right? And go and sign up for it. Invite your friends, invite everyone you can, and I'll be here. The next webinar will roughly be in about 2 weeks, right? Right, yeah, be in about 2 weeks, and be sure to tune in, right? I'll be teaching you some exciting stuff. You know, I got everything planned out for you, right? I'm not sure what I'm going to teach. It might be oscillators, might Fibonacci is slightly more advanced, but I'll take your feedback that you shared with me today into consideration, right? But what I want to say is, guys, stay safe, trade well, right? Yeah, trade well, and let's keep in touch. All right, you can search me up. It's very easy to find me, and I'll catch you guys in 2 weeks' time. I'll prepare materials for you guys. All right. My throat is dying, so I'm gonna get my water and go get my whiskey, and I'm gonna call it a day. All right. Cheers, guys, and peace out. Take care, everyone. Thanks for tuning in. Thanks for tuning in. Awesome. Peace out, guys. Peace out. Now, how do I end this thing? Uh...